Hello friends, welcome to my channel Finance Eco India. Today we will do comprehensive analysis of Reliance Industries Q1 Financial Year 26 results. In this video we will explore the profit beat, segment-wise performance, analyst takeaways, what investors should do, management guidance and the long-term play. But before that, please subscribe to my channel Finance Eco India. Now let's begin. So, Reliance delivered a record-breaking quarter. PAT surged 78% to Rs 26,994 crore, exceeding street estimates by over Rs 4,900 crore. Revenue grew modestly, but EBITDA rallied strongly to Rs 58,024 crore, with margins expanding by 460 basis points, a stellar start to financial year 26. So earnings were boosted by three key drivers: a nearly 9,000 crore one-off gain from divesting Asian Paints stake, strong refining and petroleum margins in oil to chemical, and robust performance in retail and Jio segment. Let's break down Reliance performance by segment. Oil to chemicals saw a healthy 10.8% year-on-year rise in EBITDA, fueled by strong refining margin and higher petrochemical demand. Jio led the charge with a 23.9% jump in digital EBITDA, supported by over 200 million 5G user and ARPU of Rs 208.8, with margin up about 210 basis points. Retail contributed strong momentum too. EBITDA rose 12.7% with revenue at Rs 84,171 crore and profit up 28% to Rs 3,271 crore. The oil and gas segment saw a modest dip, primarily due to natural depletion at the KG-D6 field. In summary, O2C grew 11%, Jio 24%, Retail 13%, while oil and gas declined slightly. Reliance didn't just beat profit estimates, it surpassed consensus significantly. CLSA hailed this quarter as a pivotal moment, assigning a 14% upside given retail and telecom momentum. Meanwhile, JM Financial and Bonanza upgraded to buy, forecasting a strong 15 to 20% EPS compounded annual growth, citing sustained gain in Jio and Retail operation. So let's discuss the investors' action, what they should do. Strong buy. The conglomerate diversified triple engine model spanning oil to chemical, Jio and Retail generated robust earning across segments. Analysts view this mix of business and structural margin improvement as compelling for further upside. Monitor EBITDA substantially. While Q1 benefited from a one-time Rs 8,924 crore gain on the Asian Paints stake sale, core EBITDA excluding this still grew by approximately 15% year-on-year. Investors should watch if this strength holds without the non-recurring boost. So let's discuss the risk involved with this. Oil to chemical volatility and oil and gas pressure. Though O2C EBITDA is up 10.8% year-on-year, macro volatility like crude, margin swings or shutdowns could dampen results. Similarly, a natural decline in KG-D6 upstream production slightly dented the oil and gas segment this quarter. Overall reliance on core earnings and resilience in its key business lines underpin the strong buy call. But investors must keep an eye on margin stability and cyclical risks. So friends, now let's discuss the management commentary. Mukesh Ambani in Q1 Financial Year 26 performance said, Reliance has kicked off Financial Year 26 with a robust all-round operational and financial performance, even amid volatile global headwinds, remarked Chairman Mukesh Ambani after Q1 results were announced. Let's break it down. In the oil to chemical division, despite sharp fluctuation in crude prices, the business delivered strong growth. This was largely driven by sustained domestic demand and a strategic value-added solution through the Jio BP fuel network. The Jio digital segment continued its ascent, crossing 200 million 5G subscribers and over 20 million home broadband connections, while other becoming the world's largest fixed wireless access provider with 7.54 million users. On the retail front, Ambani highlighted resilient execution, noting a significant expansion in customer base, now 358 million, and a strong improvement in key operating metrics. The growth was backed by launching new store and launching in-house FMCG brands. So, Ambani message is clear. Despite global uncertainty, Reliance delivered performance across its energy, digital and retail engine, reinforcing confidence in its multi-pronged growth strategy. So the Q1 commentary highlights are: O2C stood firm amid unstable energy market, while Jio scaled with 200 million plus 5G user and become largest FWA provider globally. So future growth will be driven by asset monetization, digital and retail scaling, and initial performance from the new energy vertical. Now let's discuss what investors should do. Here what to track after Reliance strong Q1 performance. Hold or buy. Momentum continues across Jio's digital service and retail, with both delivering solid double-digit EBITDA growth. This diversifies growth engine is driving confidence for sustained gain. Track margins, excluding the rupees 8,924 crore one-off gain from the Asian Paint stake sale, core EBITDA still expanded meaningfully. Investors should watch if these core margins hold up in upcoming quarters. Monitor CapEx. Reliance is aggressively investing in its new energy vertical, tracking how much cash is being allocated to solar, batteries and green hydrogen projects will be critical to understanding long-term growth potential. So micro things what we will watch: oil prices remain volatile and regulatory shift could affect refining margins. Given Ambani's comments on energy market uncertainty, this external factor must be monitored closely. So investors should stay on board. Jio and Retail are firing on all cylinders, but keep a close eye on margin stability once one-off gain fades. Watch CapEx flow into new energy initiative to gauge long-term investment returns and stay alert to macro risks, especially oil price swing and policy change that could impact oil to chemical margins. So in summary, Reliance delivered strong results. Profit, margins, diversified segment strength. Analysts are positive. Investors should hold or build, tracking core EBITDA and strategic milestones. Thanks for watching. If you find this breakdown useful, please like, subscribe and share your thought. Is Reliance India's long-term play? See you in next video. Thank you and Jai Hind.